Sanjiv Prasad, Senior Executive Director and Co-Head of Kotak Institutional Equity joins us live. Sanjiv, good morning. Thank you for joining us. A lot of M&A seems to be happening in India. First one in the telecom sector, now another big one in the sugar sector. What do you think the M&A in the sugar sector and the telecom sector means for these two sectors?
Well, I guess these are, small ones which have happened. Obviously, the telecom one is a pretty small one in the context of the size of the sector and the number of players who are still out there. So I think we are a long way off from, where you would see, real consolidation in the industry. Having said that, I think it's a matter of time before you see consolidation in the telecom industry. It's already happening in two ways. One is the rich is becoming richer in the sense, they are getting more and more share of revenues. So currently the top three already have about 70% of the voice revenues and probably much more of the data revenues. The second form of consolidation is happening in the form of spectrum. And if you look at the recent participation, effectively there were only four real participants. I mean, three big incumbents, which is Bharti, Idea and Vodafone, and a new entrant, Reliance Jio. So, in this sector, if you don't have spectrum, which is a basic raw material, I suspect others will really struggle to grow beyond where they are and will probably keep on falling behind the three big incumbents. So, consolidation will happen. At some point in time, you will actually see that formalizing in the form of actual M&A. Having said that, the big problem with many of these companies is they're sitting on large amounts of debt, virtually no EBITDA to support that debt. So it will involve a fair amount of haircuts on part of the debt holders. I assume that's the only way this deals can go ahead, in the sense enterprise value has to be a lot lower than the current enterprise value of those companies. I mean, enterprise value is largely, I guess, net debt for those companies. On the sugar industry, I assume it's more of a one-off thing. I'm not very knowledgeable on the sector. I haven't really covered it, or we really don't have much of coverage on it. And given the mess in the sector in terms of regulatory uncertainty, etc., I really don't have much of a view on that. Yeah.
Sanjiv Prasad, let's talk about crowded trade and popular trades. One crowded trade is long IT, another crowded trade is short bank. Does it make sense to get out of both these crowded trades, which is time to sell IT and revisit banks?
Not really. I think IT is still okay, in the sense valuations are quite reasonable for most of the tier 1 names. If you look at Infosys or Wipro, they are between 15 to 16 times in March 2015 earnings, and there is fair bit of visibility on the earnings of this company, in the sense most of these companies will deliver about 13 to 16% revenue growth. We had all these companies at our conference this week, and most of them are sounding pretty confident of at least mid-teens kind of growth. And you saw the numbers on NASSCOM, 13 to 15% growth for the current year. So I think there is no big urgency to sell off over there and get on to some other sector. Also, this is supported by some amount of global recovery, which is visible now, in the sense US is doing quite well. Europe is fast recovering from its problems, although it's still going to be a slow recovery over there. And many of these companies are still quite under-penetrated in Europe, so I think there is some scope to increase market share over there. So I think the broader story still remains intact for IT, and of course it's a very good hedge on the rupee. God forbid something goes wrong with emerging markets or with respect to India's election outcome, then IT will hold up reasonably well. Coming to banks, you have to look at this somewhat on a disparate basis, in the sense you have banks, and then there are banks, in the sense you have good quality banks, and then there are some really bad banks out there. So you'll have to be careful in selecting the right ones. As far as some of the private banks are concerned, we are quite okay, rotating into those names. And over the last 1.5 months, we have taken a more constructive view of the private banks, given the fact that they have reasonably strong balance sheets, capital adequacy ratio, etc. are quite fine, whereas the public sector banks will struggle with a lot of NPLs and inadequate capital going forward. So you have to differentiate between the banks which are available. The ones which we like in the banking space are HDFC Bank, Axis, and ICICI Bank.
Sanjiv, Nikunj just touched upon the telecom space in particular. You track this sector pretty closely as well. What is your own view? A, with the kind of sensitivity that it has to, regulatory frameworks and government as well. And in particular, of course, there are one-off negative news like a Bharti in yesterday's trading session where the Nigerian Supreme Court has ruled against it.
Well, I think the latter is not very meaningful in the sense there is a back-to-back agreement with Zain, the seller over there. Whatever obligation would be there, I don't think it's a $3 billion number to start with. It's going to be a pretty small amount of money. And that is going to be, paid by Zain eventually. So I think as far as Bharti is concerned, the impact of the development in Nigeria is going to be pretty negligible. I think the broader worries in the telecom sector is, whatever price stability had started emerging in the voice market that could get disrupted by the potential entry of Reliance Jio, whatever strategy it follows. I think people are getting too nervous about this, and the way I look at the sector is, whatever are the negative regulatory developments, will eventually get passed on to the consumer. It's not as if the companies have the balance sheets to withstand it, and whatever price discovery is happening is based on not a government diktat, but the supply-demand mechanics as far as the availability of spectrum is concerned, and compulsions of various telecom operators to either defend or grow their businesses. And as you saw in the recent round of bidding, there were effectively only 4 players who have any real balance sheet left in the sector. 3 incumbents and 1 Reliance Jio Infocom. So all said and done, I assume the higher regulatory costs are going to get passed on to the consumer in the form of higher voice tariffs. It will happen over a period of time, so I won't be too worried about this aspect. Unlike in 2008 when you saw a number of new players coming in, at that point in time, some of these new entrants got too excited about the opportunity. They thought that they could fund the losses for some time, but look at where they are in terms of the balance sheet, and all of them sitting on large amounts of debt, virtually no EBITDA, and no business case really. I think over a period of time, these guys will just close and get out of the market. It's a matter of months or maybe 1 or 2 years before you start seeing a real consolidation industry, effectively not 3 plus maybe 1 player left in the industry. Now coming to Reliance's strategy, honestly, I'm not very sure what is the strategy over here. In a sense, the amount of money which Reliance is putting into the sector, I am not very sure how it's going to recover that.
Fair point. So we've got your take on telecom, Sanjiv, but I want to understand your rationale behind increasing weightage for TCS and for HDFC Bank. Now, TCS and HDFC Bank are great franchises, but they are also expensive stocks. TCS, the P multiple based on FY15 estimates, it's trading at a P multiple of 20 plus. HDFC Bank, even though the stock has corrected marginally from the recent high, the stock is still trading at about 3.5 times price to book.
Not really. Just to correct the valuations, TCS is more like 18.5 times in March 2015, and HDFC Bank, if I look at March 2015 book, is more like 3 times. But anyway, leave that aside. The more important thing is, what are these companies capable of delivering? And, I talked about the IT sector and the growth opportunity over there earlier, and TCS is probably best equipped to grow. If the rest of the industry is growing at 13 to 15%, this company will grow at somewhat 1 or 2 percentage points higher. And again, in the conference which we had, TCS was present, and it said 15.5% growth is very easy. There's no reason why it can't deliver that kind of numbers in fiscal 2015. So we have a fair bit of comfort with the the quality of delivery and execution of that company, and ultimately you need to back the right companies which can execute. Same way, if you look at HDFC Bank, I think over the next 2 to 5 years, this and a few other private banks are really in a position to capture immense market share, given the, whenever the growth in credit comes back, given the balance sheet and the execution capabilities of some of these banks, and the fact that 80% of the market is struggling. You have the rest of the banking sector which has huge problems on NPLs and, capital inadequacy. So there is a big opportunity for some of those private banks who have been smart enough to conserve capital, not extend to vulnerable sectors like infrastructure, etc., and are sitting on very clean books. So, as and when the opportunity is available in terms of credit growth coming back, which I think is maybe 6 to 9 months away, and whenever the managements feel more comfortable about the quality of credit, these guys can just accelerate credit growth, and suddenly the 3 times book may not be looking that expensive. Also, if you look at HDFC Bank on a PE basis, this company is now available at about 12 times on March 2015 basis, which is looking quite attractive in terms of EPS numbers.
Sanjiv, you also track the oil and gas space pretty closely. How are you approaching the sector, and what is it that you're advising your clients?
Well, as far as most of the PSUs are concerned, we have a positive view in the sense that some of the mess we are seeing in terms of subsidy is looking like it will get resolved in the next 12-18 months. Obviously, it's a matter of faith. The government can, go back on its deregulation program. Obviously, we'll have a new government after the elections. We don't know what policy framework it will adopt as far as the sector is concerned, but the way I look at this sector is this is now reaching an end game, in the sense if you want to have an energy sector, we better get the policies right. Otherwise, we'll have a situation where we might not have much of a sector, in the sense we do not have the right incentives for any company to invest in India. Be it on the refining side, be it on E&P, which is much more important. So we have to move to a situation where you have correct prices for the final products, whether it is crude oil or natural gas, and we have seen the problems with this policy for the last 10 years now. You have a sector where none of the public sector companies really have a lot of muscle to invest. A lot of the profits are siphoned out by the government, and there is virtually no private sector investment in the company going forward. In a sense, you only have Reliance would invest in a meaningful way. There is no foreign company who is interested in this sector. Now you look at the other way, which is the fiscal problem. If this country has to solve the fiscal problem, and I assume it has to be solved if India has to eventually move to lower interest rates and inflation. Otherwise, again, you don't have much of an investment story. Diesel is one of the issues which has to be tackled. There is no other way you can bring down fiscal deficit without tackling the fuel subsidies. Look at fiscal 2015. Clearly you will see an increase in food subsidy because of implementation of Food Security Act. You saw the budget numbers. We are budgeting 25,000 crores increase in food subsidy. Fertilizer subsidy will also increase because of increase in natural gas prices. So if you have to control subsidies, diesel has to go. In a sense, diesel under recoveries have to go. And any sensible government, will continue with this process of monthly price increases, half a rupee or whatever the new government may decide. So I think when I look at the sector, it's a seriously undervalued sector, assuming some of these things fall in place. And I'm basing my views more on the fact that, energy security is paramount. Otherwise, we have a severe problem 5-7 years down the line.
Right.
And the second one is, we have to mend the fiscal situation.
Okay. Sanjiv Prasad, I've got a sense from you on why you like Telecom, why are you bullish on HDFC Bank and TCS. So at the current juncture, assuming that we have a big event which is elections, which is in May, what are your classic long-term buy ideas? What are you recommending your clients that they should buy for the long haul and they should not really, bother about the election volatility?
Pretty much the stocks which we discussed, in the sense IT is, somewhat impervious to what happens in domestic or national elections. If it's a good outcome, it doesn't really affect the sector unless and until the rupee starts appreciating in a big way, and I would be really surprised if that's the case, because somewhere around 60, I think the RBI will probably start, ensuring that the rupee does not appreciate too much, given the newfound competitiveness which India discovered for the manufacturing sector, and I think that's something which we need to encourage. Obviously, you have to resolve a lot of other issues over there. And if you have a bad outcome anyway, if rupee will depreciate, IT will again do well. But the call here is not so much linked to the rupee, it's more linked to what we are seeing in terms of the fundamentals of the sector, global recovery, the capability of the companies to participate in that, increase in market share, etc. Same way when I look at the opportunity which is emerging in the banking space in the next 2 to 5 years, we will go by the private banks. Here there could be some impact of elections. If you have a favorable outcome, you could see the banking sector doing well. And I would assume in that case, banks which are trading at low valuations, private banks such as Axis or ICICI on concerns of NPLs, those could get related significantly. So again, those are the banks we are looking at favorably.